For decades, the playbook for investing in China felt, well, pretty simple. You'd bet on its incredible economic growth, and you pretty much couldn't lose. But today, that playbook is completely broken. The old rules are out the window, and everything has changed. So let's get into it.
And this really brings us to the one massive question that hangs over everything. Is the China growth story, the one investors have been banking on for so long, is it actually over?
And this slide right here shows you the fundamental shift. The old way of thinking was a broad bet on the whole economy. The classic "a rising tide lifts all boats" idea. But the new thesis? It's a much more targeted and, frankly, a much higher stakes wager on specific state-led policy. You're not betting on the market anymore. You're betting on a government mandate.
So, to really get a handle on this new world, we first have to understand why that old model just completely fell apart. This is the story of what we're calling the Great Decoupling, the split between China's economic growth and what investors actually got back. For years, the narrative was rock solid, right? We all saw those charts. China's GDP growth was just incredible, seemingly unstoppable. It was the engine of the entire global economy, and if you were an investor, it felt like the surest thing on the world. But what was really happening on the ground was a whole lot messier. And here's where that old story just completely shatters. Look at this. While China's GDP was booming, its major stock markets were actually sinking. The 5-year returns for the Shenzhen and Hang Seng indexes, they went backward. This is the proof right here. All that amazing economic growth just wasn't trickling down into investors' pockets.
And you have to ask, why? Well, a huge piece of the puzzle is the visible hand of the state. The tech crackdown that started back in 2020 is the perfect, brutal example. An estimated $2 trillion in market value, just wiped out. It was a painful reminder that, at the end of the day, political goals can, and absolutely will, crush shareholder interests in a heartbeat. Okay, so with that old model totally broken, Beijing is pivoting, and they're pivoting hard. This new direction has a name, and it's what this is all about. The sovereign AI stack. This is the new game in town.
So what on earth is the sovereign AI stack? Well, you can think of it as a massive, top-down, state-led mission to build a completely self-reliant artificial intelligence ecosystem. And when I say everything, I mean everything, from the most basic semiconductor chips all the way up to the apps that people use every single day. Let's break that down into 3 main layers so it's a little easier to digest. Step 1 is all about the hardware, becoming totally self-sufficient there. Think of companies like Huawei with its Ascend chips. Step 2 is about creating advanced AI models, where you have these new AI tigers battling it out with the old giants. And finally, step 3 is building all the software and services that run on top of it. And let's be really clear about the motivation here. This entire national project, this whole thing, is a direct answer to U.S. export controls on advanced chips. For China, figuring out this hardware problem isn't just about the economy. It's a matter of national security. It's a matter of survival. So how does a massive national strategy like this actually play out in the real world? Well, you've got to look at the key companies involved, and you shouldn't think of them just as companies anymore. They've effectively been drafted onto a national AI team. And we're going to start with Tencent. In this new landscape, it's widely seen as the highest quality, most stable player of the bunch. Tencent's big advantage is just how resilient it is. It's got this huge, diversified empire in gaming, WeChat, and fintech that gives it a really solid base. But the real game changer here is how AI is set to supercharge its ad business, especially by plugging its new AI model right into WeChat. That potential is why the analysis sees it as a core buy in this new playbook. All right, next up is Baidu, and this is a totally different kind of bet. If Tencent is the steady hand, Baidu is described as the purest way for an investor to go all in on China's AI dream. Baidu has pushed all its chips to the center of the table. The entire company is now built around this AI-first future, and they're pinning all their hopes on their Ernie language model and their Apollo autonomous driving unit. It is a massive gamble, and all that spending is really hitting their profits right now. That's why it gets slapped with a speculative buy label. This one is definitely not for the faint of heart. And finally, we've got Alibaba. The company that was once the undisputed king of Chinese tech is now seen in a very different light, as a complex turnaround story.
It's kind of wild, but Alibaba is now being called a value play. It's buying back tons of its own stock, and at the same time, its AI-related revenues are showing absolute explosive growth. But and it's a big but. While that pivot to AI looks promising, there's still major questions about the rest of the business. That's why the analysis suggests a hold. This is a bet for a very patient investor.
Okay, so before anyone gets too excited and jumps in, you have to approach this new playbook with your eyes wide open. The analysis points to 4 very distinct, very real layers of risk that you just cannot ignore.
So you're facing 4 huge hurdles here. First, geopolitical risk. The rivalry with the US isn't going away. Second, regulatory risk. Beijing can change the rules of the game overnight with no warning. Third, macroeconomic risk. China's domestic economy is still on shaky ground. And finally, the big one, execution risk. The entire plan, the whole AI stack, hinges on them solving that critical semiconductor problem. If they can't, the whole thing could just crumble.
So let's bring it all home. What does all this actually mean for an investor looking at China today? Well, it all boils down to one very clear, very high-stakes bet.
Here's the bottom line. Investing in China today is no longer a simple bet on its overall economic growth. It is a direct wager on the ability of the Chinese state to pull off this absolutely monumental AI ambition, all while under incredible pressure, both from the outside world and from within.
And that leaves us right here with this one final massive question. Is this a truly historic investment opportunity, or is it a giant value trap waiting to spring? The answer isn't going to be found in any market analysis or quarterly report. It depends entirely on one thing: the unwavering and frankly unpredictable ambition of the Chinese state.